as an analyst, an investor, having like an important vision about how the world is going to play out is essential. In many instances, it's just cycles of overestimation and underestimation.
So what does the future of media look like?
YouTube is now basically the most viewed individual network or platform on TVs. TikTok, Instagram, and Facebook have exploded. And we're on the cusp in the next couple of years to unleashing the creative power of generative AI for individuals to sort of turn a vision into a creative product that other people can enjoy. There's just so much potential. We will see that part of the ecosystem continuing to take share for a really long time.
Today, we have Brad Barrett joining us. Brad has been at Capital Group for almost a quarter of a century, 24 years, and he's based in LA. Brad, welcome.
Thank you.
You have 4 kids, 2 dogs, 2 cats, and 8 chickens. So on any given day, is there someone who's at the top of that pecking order? Is there, not to use pecking, but is there anyone at the top of that order?
It's probably easier to describe who's at the bottom.
Yeah. Is it always the chickens?
Well, no. The chickens, my hens are probably the most productive of the bunch, right? They at least give eggs. I like to give my dog Charlie, who's a toy poodle, a hard time to my kids. Never thought about myself as a toy poodle type of guy, but and I don't totally remember agreeing to get him, so I give him a hard time a lot. But like the meme says, there's no stronger bond than that between a father and the dog he didn't want. And I find that to be true.
Okay. Well, I figured we'd come out of the gates hot with family, but let's get into things. About 25 years ago, you read a 1999 Smart Money article, and it got you interested in Capital Group in some way. Can you tell us about that?
Well, my recollection is the article made Capital out to be this incredibly low-profile firm that, given its size in the industry, was virtually unknown outside of the industry, and they had this unique culture of sort of no star system. And this is in the sort of mid to late 90s when star mutual fund managers were all over the place. There's no star system, there's no corner offices, such a low profile. They didn't do any publicity.
That was a bubble time. That was a real bubble time.
And I found just the whole thing sort of very, very appealing because I was interested in the industry.
So you are our first analyst on the podcast. We've had portfolio managers. You're our first analyst. And folks might not know, but analysts at Capital Group, they don't work for portfolio managers, first and foremost, and they also are investors. They're not rating stocks, walking the hallways saying you should buy or sell this. They actually invest client assets, which is a huge differentiator for us. What's the benefit of having analysts invest alongside portfolio managers?
There's a lot. I mean, first and foremost, it makes the job like a lot more fulfilling. So it would, and having very long tenured analysts who do this for decades, I think is a unique element of our system and part of our differentiation. Second, it makes communication that much more clear when there's just something different about saying, hey, you should buy this stock, and saying, I just bought this stock, right?
Showing your conviction through your holding.
Exactly, right. And then it also gives us a long bench of very experienced investors to choose from as we develop the next generation of portfolio managers.
So you're on a journey now, and you're becoming a diversified portfolio manager over time. That body of work that we have on you, that quantitative data that we have on you, helps figure out which portfolios you might be best suited in. We know how you have upside capture and downside capture and how you concentrate portfolios. So that kind of information makes us all smarter when we're trying to construct portfolios through portfolio managers later on.
Yeah. And sort of what style of strategies I might be best fitted towards, all of those things, yeah. I mean, it's 20 plus years of data now.
That's right. And how does it work in everyday life? So you're not necessarily walking the halls saying you should do this and that. You're investing. And again, there's no hierarchy. You're both investment professionals. One may be a PM, one may be an analyst. But take me into a meeting, or how does it manifest itself in everyday life?
I mean, the biggest manifestation is we are very largely self-directed, have an incredible amount of autonomy, our analysts, to sort of go out and figure out the best investments within sort of your fishing pond. So that's what we spend the vast majority of our time doing. And then as we find great ideas, essentially what we do is we come into meetings and say, hey, I am buying this stock for the following reasons, and I think you should too. And it's sort of a powerful, like I said, powerful way to communicate it. You have, skin in the game, if you will. You're in the arena. Portfolio manager can look and sort of observe the degree to which your conviction translates into your portfolio.
How you're sizing it in your own research portfolio.
Yeah. So we have every reason in the world to try to get them to own it also, right? I mean, at the end of the day, we want to own it in our own responsibilities as analysts investing money, but the way we have the biggest impact is getting others to own it as well. So spend a fair bit of time just describing why you're buying it and why you think they should too.
And you traveled together quite a bit.
Oh yeah.
So would you say your time on the road over your career as an analyst, is it 10%, 20%, 30%? If you had to look back over the last 2 decades, how would you think of that on average?
Well, sort of covering media and internet stocks for the most part makes my life a little bit easier with LA and
true.
Northern California being the 2 primary areas, but probably a quarter to a third of the time we're on the road.
And it's helpful to travel with colleagues. You get to know them better, and you get to hear the questions they ask, and they hear the questions you ask live time with the management.
Yeah, and you build trust. That's such an important part of the process because by dint of this industry, a lot of the times things are not necessarily going well. And it's sort of those times when you can have the biggest impact making better decisions.
Yeah, trust is so important. I know you follow Bill Gates, and Bill Gates said that we tend to overestimate the change that will occur in 2 years and underestimate change that will occur over 10 years. How does that mindset impact your own investment process?
Yeah, it's a good question. I mean, I actually find that that is true in many instances. And in many instances, it's just cycles of overestimation and underestimation for a big industry change. Right. And as an analyst, an investor, I think having like an important vision about how the world is going to play out is essential, right? But having some sense as to the pieces that need to fall into place before it can really happen, and thus sort of the timing of it, is just as essential, because being too early can be indistinguishable from being wrong. Yeah. And oftentimes there is a great amount of undervalued stocks in the early stage. For instance, streaming video really started in earnest 2005, 2006, 2007. There was a period there when big market concerns about the cable operators, Comcast and at the time Time Warner Cable, being disintermediated by streaming video. There was 5+ years before you really started getting any inkling there. And so there was a period when they were undervalued based on that, and that was a great opportunity. The timing of it matters a great deal because it can give incumbents time to react and adjust their business, and that matters. So having a vision is important, and having a good sense of what needs to fall in place is probably just as important.
Right. Thesis and timeline and the pieces of the puzzle that need to fall into place. Since the 1970s, in your particular investment unit, we have, for those who don't know, we have 3 equity units. In your particular one, there have been 2 analysts in the last 50 years in media, you and Gordy Crawford. So there's a lot of continuity. Can you talk about how that transition with you and Gordy went, and how having that continuity with management teams is a benefit to us?
Yeah, it is kind of amazing. It's sort of 2 analysts in 50 years.
Amazing.
I think there's a period of time when Gordy sort of introduced me to all of his contacts and to the executives at the company, and sort of gave me a certain degree, at least a minimal degree of legitimacy in their eyes that sort of kickstarted the relationships, and that's very important. So that whole process is super important. Probably even more important was the 10, 12 years in between him sort of transitioning the coverage to me and before he retired when he was a portfolio manager. But just as situations arose, he would have like the historic perspective.
Institutional knowledge.
Yeah. And what investors were thinking, for instance, when AOL and Time Warner merged, right? This is not necessarily an easy thing that you can do an internet search and figure out. It really is mostly in the minds of those people who lived it. So getting that perspective as the mobile transition was happening from desktop to mobile was, I think, invaluable. And there's just innumerable of these sort of institutional knowledge transmission as you have people who have covered the industry for so long working together.
And Gordy knew everyone. I mean, Gordy was probably the most well-known media analyst in the world at that time.
He really was, yeah.
And so you take over that responsibility from Gordy, big shoes to fill. Did you two travel together? You know, obviously he's at the table as a diversified portfolio manager, but still with that institutional knowledge. But did some of that sort of knowledge transfer come in the actual meetings with the companies? How did it work?
Oh, yeah. Sometimes, you know, I remember being a young guy and I would have all my spreadsheets and really
8 chickens ago.
Yeah. Prior to the menagerie of animals that I deal with now. But and I would sort of think of Gordy and the older guys as they're coasting on our hard work. It's the young guys, and being in meetings and recognizing like the depth of knowledge that he had, and not just the depth of knowledge from history, but he was still as engaged in the numbers and the footnotes of the 10K. It's just a culture here where the aspiration is for analysts just to be at least the aspiration is to be the world's foremost expert, to know these stocks better than anyone else. And it's sort of that cultural transmission of being in there and seeing it firsthand was really influential.
It's a great term, cultural transmission. Let's stay on media. And in the office treasure hunt, I found a book in your office. So sometimes people have books in their office because they like to fill the shelf.
Yeah.
And sometimes they might mean something. So the book, for those who are listening, is called Cable Cowboy, and it's about John Malone. Can you tell us why it's in your office and why it's important to you?
We used to have a physical library here.
Yes.
So when I was flipping through this, and I actually noticed that I did check this out of the Capital Group Research Library 20 plus years ago as I was picking up cable as part of my research process.
So before we get... Did you ever check it back in?
Well, it's still out on loan. We don't have a time limit. I don't know if we have a physical library anymore.
We have to do that compounding late fees.
Right.
On that over 20 years. But sorry, go ahead.
And it was just part of the research process of getting up to date on the history of the industry. And it's kind of funny because Gordy's featured in there a few times in the Capital Group. We're holders of, TCI and Liberty. And, flipping through it again, it was just like a reinforcement of how much this industry changes over time, how much technology sort of roils the supply chain.
So let's talk about that transformation. In 22 years, you've seen a lot. What about it excited you most? Is there one period of time in particular, 1, 2, 3 year period, one event? What was the most exciting part of that transformation for you?
I think it's probably in the 2012 to 2015 timeframe when streaming, when Netflix in particular, really started to take off. And it became increasingly clear that we had this positive feedback loop where the bigger Netflix got, the more money they could spend on content, which increased the demand for the product, which drive more subscribers, more pricing power, and allow them to spend more on content. Started extrapolating the numbers out and could see that by the mid-2020s, and I don't know, this was 2015, the amount they could spend on content was sort of more than the rest of the industry exports combined. And sort of as you think about industry changes, one of the most powerful things is sort of recognizing these feedback loops where the bigger a trend gets, the more powerful it gets, and it can build on itself. And that was not just, a technology trend. That was like a reordering of the supply chain in
a fundamental change to the whole business
in
model.
movies and TV. That's still going on to this day. But it was those early days when it hadn't fully been recognized. I think that was sort of the most exciting.
You look at Netflix market cap today and you think back 5 years ago or 10 years ago, could you imagine Netflix market cap would be what it would be?
Not really, and it could have gone a lot of different ways, right? Nothing is written in stone, and there's individuals who had to do a lot of hard work to make that happen, and could have gone a lot of different ways, but it has been a sort of a remarkable transformation in the industry.
So what does the future of media look like? We've talked a little bit about the past and how much it's transformed. Will the rate of change be the same in the future, different? What do you think the future looks like?
It's sort of interesting time because I think on the one hand, what we think of as traditional movie and TV show distribution and production, I think we have sort of line of sight to how that will look like on a global basis. It's sort of probably 3 or 4 big global players who are doing most of the distribution and the bulk of the production of professional movies and TV shows. And that's started to become clear over the last couple of years. And it'll be pretty concentrated because just the returns to scale are so significant in this business.
Barrier to entries.
Yes, you're not going to have a big fragmented base of the services that are unlikely to become that 3 or 4 will merge or find different business models. So that, on the one hand, that is becoming a little bit more clear now. But we have this other ecosystem which used to be called user-generated content, short-form video, which is still growing extremely fast. YouTube is now, according to Nielsen, basically the most viewed individual network or platform on TVs in the US. Obviously, TikTok and short-form video on Instagram and Facebook have exploded. So, and we're on the cusp, I would say, in the next couple of years to sort of unleashing the creative power of generative AI for individuals to sort of turn a vision into a creative product that other people can enjoy. So that part of the ecosystem is the most dynamic, I think, the most difficult to predict, the most exciting to sort of view. And, I could see that continuing to, sort of gain share of our sort of total entertainment time for a really long time.
So that sounds a bit like democratization of that content. And so how does that mix with a really high hurdle to get over to beat back these incumbents who are huge and are going to control the vast majority of the space, and then having 3 folks with a little bit of technology and some creativity being able to produce content that seems pretty impressive? How do you think of that democratization?
We'll have to see. It's difficult to say, right? I mean, it's probably difficult to overstate the potential for sort of generative AI technologies to, allow an explosion of creativity. So we've just never had it. It's been, very expensive and difficult to put together a professional piece of content. And it still is going to be that for a long time.
Right.
And I think there will always be a lot of demand for sort of professionally produced, stories.
Big scale production.
Yeah, with big movie stars that everyone knows and that everyone views. But, there's just so much potential for so much creativity to be unleashed that I think we will see that part of the ecosystem continuing to take share for a really long time.
And then companies will figure out how to monetize that.
We already are. Advertising has become very effective at monetizing video, and I suspect I believe pretty strongly it's going to become just that much more effective. So the monetization part is not the big unknown, I think. I think the big unknown is sort of how compelling will this content be? That's the big
Because
unknown.
at the end of the day, that's the most important thing.
Absolutely, right.
So analyst portfolios tend to be more concentrated than diversified portfolio manager portfolios. Let's talk a little about your portfolio today. Ideas, conviction, nothing that has an open order on the trading desk as of today, but what do you like?
Well, sort of along these lines, one thing I've been thinking a lot about is the impact of generative AI on Meta and on consumer-facing companies in particular, right? We've seen sort of the picks and shovel guys in generative AI, which is clearly going to be a big transformational technology, be recognized by the market, right? And lots of enterprise software companies be recognized as beneficiaries of generative AI. But we really haven't started to see it on the consumer side. And you only have a handful of these frontier models. They're extremely expensive to produce. There's limited talent to do it. It's just very difficult. And Meta is clearly in that handful of companies. So from that perspective, they have more control over their fate, potentially more ability to capture the economics of the value created. The second thing would be, we're so early in the development of this technology that it's not clear all the use cases that will really create value. But one of the ones that has emerged, I think, is being pretty clear, is just the impact on advertising, on digital advertising in particular. The ability to make much more personalized ads with, dynamic backgrounds or even dynamic, a creation of video for small and medium-sized businesses. Previously weren't able to do that. So they're sort of beneficiaries there. The third element would be, we're going to move to sort of, I think, Gen AI chatbots or assistants sort of answering questions to being more agentic, right? So it will be like an AI agent that can do things in many of the ways that we have individuals do now. And in much of the world, actually, over WhatsApp, a way that consumers interact with businesses is over WhatsApp, is over messaging. And this has been a difficult thing to scale in developed markets because it's very expensive because of labor costs. As you develop AI agents, that's a huge opportunity. It's very valuable for companies to be able to communicate via text message with consumers. Then the last one would just be on this, putting creative tools in the hands of consumers, Gen AI creative tools to unleash their creativity and create engaging experiences for us to enjoy.
And with Meta, as you say, it's done exceptionally well. But if you look over the next 5 or 10 years, there's still so much opportunity to create value. And that's where that long-term investing mindset comes in.
And you think about the opportunities just relative to what one thinks is priced into the stock, right? And that's the sort of art of figuring out where the opportunity is. And I would argue that not a lot is likely priced in for those, and for not unreasonable reasons, because they would need to prove it out. There's just very limited proof points at this point.
Yeah, we had Mark Casey on a while back, and he said the same thing about Google, effectively, and just saying how much is priced in versus how much isn't, and thinking you get a lot of the potential future growth for free at the current valuation. I'll paraphrase what he said more eloquently, but that was the mindset of, yes, it's done well.
Another consumer-facing company where there's probably almost certainly more skepticism about the impact of Gen AI.
Right. Not everything goes great. And so maybe it does, but if something hadn't gone right, can you give us an example of a lesson learned from one of your investments that just didn't pan out the way you hoped?
Sure. Yeah. You do this for, 22 years. You certainly have the
list
things that don't work out. You're probably not taking an appropriate amount of risk if you don't have those. So when I was I've heard you ask this question before, and I was reflecting on it.
Cheated.
Reflecting on it. And one of the fascinating instances that I learned a lot on, as sort of in the annals of history now, is Groupon, right? The fascinating thing, and this was sort of 2010, 11, 12, was Groupon was sort of group buying of services and experiences at deep discounts for mostly local businesses. It was arguably the fastest growing business of all time, went from $0 to $1 billion in gross billings in the 2011 timeframe in like 2 years. It was solving this very difficult problem for local businesses of how do we drive traffic in the door at a cost-effective way. It had like a stamp of legitimacy from the big companies who were either trying to compete or buy them. Google put in an offer to buy them for $6 billion before they came public. And not soon after coming public, the whole thing started to really decelerate and the stock really got hit. I sold it, but at a loss from where we had bought it. It subsequently went down further. And the question is sort of, how does one distinguish between a fad, if you will, and sort of a durable trend? Because in those days, it had many of the hallmarks of what you would have thought was going to be a huge, long-term, big deal.
It seemed like a win-win.
It seemed like a win-win,
for the
right?
consumer and for the merchant.
Yep. And I think in the fullness of time, what happened was you had sort of an adverse selection problem, which was it was the deal hunters who were buying a lot of these deals. They weren't likely to turn into repeat customers because they were deal hunters. And then the businesses who would be most likely to adopt it over and over were the businesses that needed to drive traffic because maybe the popularity of their service or product wasn't able to do it on its own. So, but the broader point I think was the necessity of like getting in the mind of the buyers of the products of the companies that we cover, really going deep on what is the value they're getting? Are they continuing to get it? Is there degradation in that? Because you can get instances where you have all of the hallmarks of what would be something big, but there are
missing
cracks,
a few pieces.
Yeah, and there are cracks in the foundation that
Right.
I think certainly I could have done a better job finding. And so I kind of learned a lot from that, really about getting in the head of the consumers of the products, of the companies I invest in, making sure I sort of know where the value is, where it's going, et cetera.
Let's pivot to your investment edge. Obviously successful, having done it for 20 plus years in an industry that's competitive. What's your edge?
I mean, I think the first edge is sort of the edge that all analysts at Capital have, which is we don't cover that many stocks, right? I mean, currently I cover about 20 to 25 large cap stocks, right? So it's just not that, my fishing pond is just those stocks. And I am given, honestly, all the resources I need to buy all the alternative data sets and do all the proprietary surveys and travel and meeting the companies and the customers and the competitors. And it's just those. And I've been doing that, it's a changing list of 25 stocks as you have mergers and IPOs, but, that's all I do day in and day out, basically 85% of my time for 20 plus years. So that feels like an edge, right?
Focus.
Just the incredible depth I'm allowed to go into
resources,
on such a narrow group of stocks, right? Over a really long period of time. The second would be, we really are long-term. And long-term is not just about long holding periods. I think it's more about holding stocks on the sort of investment thesis that you are okay with playing out over a longer period of time, or you would expect to play out over a longer period of time. And what that means by definition is you might have to put up with a stock that is flat for a while or a stock that has some volatility. You have to put up with some things that others, by dint of maybe their client base or who they're working for or their system, just doesn't allow for.
Yeah, their clock may run out. I mean, someone might be saying to them in 6 months, it hasn't worked out, you have to sell it. Where you have a more of an ability to be contrarian and build a position when not a lot of others love what you're buying.
If you have a conviction about what the industry structure is going to be at and the long-term margins are going to be at in 5 years, but there's no catalyst, if you will, anytime soon, that might not be an investment thesis that a lot of other market participants are willing to hold. And we are. I think that's an edge, and we, seek to find people with the quirky mix of personality traits that I think make for good investors that I probably have, a sort of willingness to hold unpopular opinions, to, care less what other people think,
Sure. Yeah. Diverse perspectives.
Paired with a sort of humility and willingness to sort of stare down your own fallibility on a constant basis and admit when you're wrong. That sort of jumble of things is probably...
Well, and what you said at the end, the capital system allows for those diverse perspectives. Someone's super concentrated in the portfolio, someone else has a wider number of holdings. Someone is more of a contrarian and enters something earlier. Someone else may jump in later when they have greater confidence. But those diversity of opinions and perspectives generate collective outcomes. And I think that's what makes Capital Group so special. And finding analysts like we were able to find you 25 years ago who has some of those diverse perspectives is the most important thing we do.
Yeah.
You do have a little bit of free time in your life, not much, with 4 kids and 2 dogs and 2 cats and 8 chickens, but you're a gardener and you have these, would you call them red hot chili peppers, or is that just the band?
Super hot.
Super hot. So
that's what they're called, yeah.
So the super hot chili peppers, why? And do the kids have to eat those as well? Is that an act of punishment? How do you think of that?
My mischievous young boys have found the hard way to treat them with respect. But I've done vegetable gardening for a long time. And there have been periods of time, I remember I spent a great deal of effort growing like a head of lettuce one season. And it's fragile and it takes up a lot of space. And at the end of it, I got a head of lettuce and my wife and I had a salad, and it didn't taste that much different from what I could buy at the grocery store. So
a lot of effort for not a lot of gain.
Right. And you can buy great produce in Southern California. So the great thing about super hot chili peppers is, number one, I like chili peppers. Number two, you can't get these for the most part. You can't buy them in stores. There's a pretty small market for these. And I love to make them into hot sauces, and you get a great yield for how much space they take up because they're so potent. So, I share, my homemade hot sauce with, buddies of mine and colleagues in the office. And there's just something fun and somewhat absurd about growing chili peppers that are 200 or 300 times as spicy as a jalapeno.
So do you have a warning label on it? Is there a Brad Barrett warning label on me?
You got to be careful because they are no joke, right?
Well, we're going to end with an obsessively grateful moment. If you've watched, which you have, you see that we end with that. I'll start with one as I prepare your oversized, obsessively grateful mug. And the one I will choose today is, speaking of children, my 3 children, because they're not really children, they're adults. They're 23 to 26, 2 boys and a girl, and we're as close today as we've ever been, which I feel is a blessing. So I am grateful for that. Brad, as I hand you your mug, which you get to keep, what are you grateful for?
Well, of course, my children, as I mentioned, but, anyone who has seen me with my wife knows that, for me, the sun rises and sets with her. So certainly my wife.
That's a lot to be grateful for. Well, thanks for being our first analyst. Again, we've had portfolio managers, but now having analysts who are investors join the podcast. We appreciate you being the first one. Thanks for joining us. And please subscribe to Capital Ideas on YouTube or wherever you get your podcasts. Have a great day.